Alright guys, so welcome to Trade Beta Global. Right now we want to do a top-down analysis using your mobile phone. Okay, so it's not going to be something that is very hard because a lot of people have been complaining I cannot use my phone to do analysis because I don't really see, right? You don't see so much data, but you don't really need much data to do your technical analysis. You have to keep it stupid simple, keep it very very simple. Like what I'm seeing now, everybody knows that um this is an uptrend because it's moving up, down, 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 moving up. Yeah, this is an uptrend. You can see an uptrend all through this place. That's all I need. This is just all I need to do my analysis. So I can even need something that starts from here. Let's just say just this box from this place. I need just this simple data, just this simple data to do my analysis. But I can also apply the look of the left side, because from the left side I know where um, the, the market is going to. All right, so right now let's see what we can see from the left side. Okay, I can see an implied fair value gap. For those of us that are doing um, ICT or smart money concept, you will know what an implied fair value gap is, where two candles, the body of two candles will not meet, but their wicks meet. Look at what I'm seeing. Let me zoom out. Let me zoom it. Look at this. Look at this candle. Look at this candle. This place. Look at this place. You see two candles there that the body did not touch them, but the wicks just create themselves and move out. So that is what I'm seeing. And again, I saw, this place is a break of structure, right? This is a break of structure. Let me just use train line to. This is a break of structure, and we can also say that there was a failure swing there. So I can see a mitigated block, like a mitigation block there. Here, I can take this as my mitigation block because I can use this as um, a failure swing. And price has traded, if you look at the the right side, price has traded into that point. Price has traded into that point. You can also use the last screen, this last screen candle here, as your order block. It's fine, you can use it as your order block, because from there down to here is a swing. Thing to yep thing to here is a swing. So if you don't know how to you can mark out your market structures, you can use ICT concept indicators to mark out your structure. Like I said, this place is a break of structure. You see that the ICT indicator by Lux Algo, ICT indicator concept by Lux Algo indicator has marked out that this is a break of structure, and this was the last break of structure. So I think the market has traded into that implied fair value gap and traded into the failure swing. That is your mitigation block, and there's an other block there too. And mitigation block is very powerful. In the PDRAs, medication block is the first. So I think the market rejected because of that, right? Because of that. Okay, let's look at what happened in the daily time frame. The daily time frame you can see some bearish movement there. The daily time frame, there is a shift market. I don't take this. That is why they say indicators lack, right? I don't take this as market structures shift below. That is why I use two indicators in case one lie, I use two indicators. You can see here this indicator says that this was the market structure shift to the downside, but I don't take it as a market structure shift because um this bullish movement was not up to, this bullish candle was not up to 3, and in ICT you must have like a 3 candle against it before you can call that a retracement. So this, I don't take this as a retracement for me. So um this is still break of structure to the upside. All right, and we have a very tiny fair value gap below it. You can see the indicator has really helped us to highlight fair value gap below here, very tiny. All right, I'm not going to use this information. What I need now is, you see the last break of structure on the daily time frame. We have your point of interest. Your point of interest is this order block, the last red candle before the break of structure, and you have that tiny um fair value gap here. You have to really train your eyes to see the tiny fair value gap, because if this indicator was not here, nobody would have known that there's a fair value gap there. But thank God for this indicator. All right, now let's look at 4 hours time frame. Look at what this 4 hours time frame is saying. So now I'm going to pay more attention to what this 4 hours time frame is saying. Okay, just like in ICT, let me go back to the daily time frame. Just like in ICT, there is this saying that when an external liquidity is being picked, what will happen? The market will go back to internal liquidity to look for is food to eat, which is liquidity. Liquidity is money in the market. It is what moves the market. So I think the market has picked the liquidity above here, making it a break of structure here to the upside, and has traded into this implied fair value gap and as well medication block, if you want to call that. Then I think there will be a reversal to at least 50% of this break of structure, or into this um, other block, and as well traded into this tiny fair value gap. But any of this, I think the market will retrace back to this internal range liquidity before going back upward, if it wants to go back upward or move below. All right, so let's go to 4 hours. What I want to see in 4 hours is here. This is our point of interest to see what will happen in 4 hours. So if I see, look at what the market is doing here. So if I see, look at the market came like this to this place, retrace to this point, right? Sorry, retrace back to this point. It wanted to give another break of structure but couldn't give another break of structure because the market didn't close below, above it. So came back to this point and still try to push again. It couldn't still break that structure. So what I'm expecting to see in 4 hours before I consider this trend a reversal to that point of interest, if I see I see a break of structure or change of character in 4 hours, if I see a change of character in 4 hours like this, I'll wait for it to come back to my point of interest. Maybe in a 15 minutes time frame, I'll just navigate my way back to that our point of interest here. I'll get my way back there. So that is what I want to see this week. If the market wants to move above it, this is what I want to see this week. But if the market still wants to go above this point, it's free. You cannot predict the market. You cannot tell what the market wants to do. If the market wants to go up, that means it must break this structure. If I see something like this, maybe push up, retrace, because it's retracing now, then maybe push up. In 4 hours, I will know that okay, the market still wants to go up. Then I'll wait for a retracement. Then I'll go to my 15 minutes time frame and take the trade upward. But I believe the momentum in the market right now has died because the bearish markets are becoming more bigger and bigger and bigger and bigger. So I think the market might retrace to this our point of interest. So this is what I want to see this week. If I can see this during the week, I'm very much okay to take the trade. So alright guys, see you in our next video. Just don't forget to like and share and subscribe to this channel if you want to learn how to do your trading analysis on your mobile phone. Just don't forget to follow and subscribe to our channel. Thank you.